Let's get some perspective on all this now from Adam Button, Chief Currency Analyst at Forex Live. Good to see you again, Adam.
Hi, Greg.
All right, so we had this day yesterday where everyone was caught by surprise, including currency traders, by the hawkishness, the bullishness of Governor Poloz and the Bank of Canada. We knew the rate hike was coming. We didn't think they would get so eager to keep on raising rates, and yet the Canadian dollar today is sort of calming down. What are you seeing out there?
Right. We have two things going on. The Canadian dollar was strong yesterday. It will continue to be strong. But right now we're in this rare period where equities are really driving markets. You don't need to look any further than the NASDAQ up 3.5% today and the TSX up 0.4% today to see that the money's flowing into tech. And that's just been the trade over the past 2 or 3 years. And it's really flowing through the currency markets. And that's what's giving the US dollar such a broad lift today.
I feel like we were having this conversation, and we have had this conversation many times this year, but just dial it back maybe a couple months. If we laid out a scenario that by near the end of October, we would be in a situation where we had a new revamped NAFTA, the USMCA, and we had the Bank of Canada not only raising rates, but getting a little more hawkish about raising rates, we'd be doing a little bit better than 76.46 against the greenback. What do you think are some of the other factors that are holding back the loonie?
Right. I mean, we've been stuck in this range now for 2.5 years, and that's with about 5 cents either side of this. And it's extremely rare to be stuck in this period or this narrow range for so long. So it's going to break at some point. You're right. We have this trade deal right now that's very good news. But on the other hand, there's a trade war in China. There are rates rising, and that's what the market's focused on. The market goes through little themes, and right now it's very much equity-centric. That's what's driving it. And bond market centric. And right now, the Canadian dollar just can't capture the imagination of the market. And, we've been through so many travails with the Canadian dollar. We were worried about housing. We were worried about this NAFTA deal. And the Canadian dollar is hung in there. And now it just needs some sort of positive catalyst. And that might be the Bank of Canada. It might need to be something else.
I wonder, too, how much stock that the market is putting into what they heard from Governor Poloz yesterday and the Bank of Canada. They talked about getting rates back to what they consider neutral. They have a range, but the midpoint of that range would be about 3% for their overnight rate. That would suggest a number of hikes coming our way next year and the year after that. But then I started to hear from economists and other observers saying they're not going to get there. I don't know why they think they can get there, but they're not going to get there. Where do you fall on that?
Well, you're a currency trader. That's what you want to hear. You want to hear this skepticism about the Canadian dollar. And I think it's deeply ingrained right now in the market, and that's why you haven't seen the reaction. There's just doubts about everything that Canada tries to do. And, when you can't build a pipeline, you can't get anything done. Well, that's kind of a well-earned reputation. However, I think the market is underestimating how strong Canadian growth has been. It's been toe-to-toe with the U.S. since 2011. And even looking forward, with all the U.S. stimulus, Canada will keep up with U.S. growth. And the Bank of Canada is going to keep up with the Federal Reserve as well. So the good news is there. But as with everything in markets, it comes down to timing. And right now, we're just caught in this vortex of equity market turbulence. Eventually, that will ebb, and the Canadian dollar will start to look a little bit better. Of course, oil has to cooperate as well.
Of course, and oil is a big wild card, depending on day to day what OPEC has to say. A thought that also crossed my mind as I was going through all this analysis of what we saw yesterday from the Bank of Canada. Some people are trying to make economic arguments as to why they shouldn't be so aggressive with their rate outlook, and other arguments about the amount of debt we're carrying. But it just sort of struck me, are we in a dry powder scenario now where the central banks of the world are saying, listen, there might be reasons for us not to go ahead, but we have to go ahead. We have to get the rates back up to some sort of normal level to get ready for the next recession?
That's right. The Bank of Canada is, in a sense, trying to protect itself, giving itself a little bit of room so it doesn't have to find itself in some sort of quantitative easing scenario down the road. If we can get rates up to 3%, well, then you have a lot of potential stimulus down the line. At the same time, if you're at 3% and you're looking out at growth in 2021 and beyond, it looks like something around 1%. And if you're appointing the next Bank of Canada governor, you might say to yourself, why don't I get somebody who's going to run it a little bit more loose so we can get something closer to 2% growth and risk a little bit of inflation? So I think down the road, that's something we're going to have to deal with, because the Bank of Canada is sort of, as you say, trading its own book or talking its own book at this point. because there really isn't anything in the inflation. That said, the outlook is pretty good. If we talk about oil again, I mean, these pipelines are going to get built. Canada will once again be a good place to invest starting in 2019 and looking forward. And that stimulus is going to come through from the U.S. And finally, this trade war between China and the U.S. is one of the best things that can happen to Canada. I mean, I've been pounding the table on this. Both those countries are going to be buying less from each other and more from Canada as this drags on. I think there's a real risk of an export boom looking out 2 or 3 years.
Lastly, I want to ask you about that crazy U.S. Federal Reserve. Donald Trump's words, not mine. Are they going to get knocked off their path because Donald Trump's not happy with them?
Yeah, I mean, I think the risks are on both sides. I don't think Trump is really serious. He has people around him that can restrain him. But at the same time, it might harden their resolve to hike. I think that's how I would feel. And anyone in their situation would feel like they were being bullied and they want to push back. So the Fed has been very clear. It's outlined what it's going to do. It's going to do something close to that. You know, if anything, it's more likely to get pushed around by the equity market than anything that President Trump is going to do. So if stock markets can continue to fall here, although obviously they're not today, but if they continue to fall, then you might start to see a little bit more restraint from the Federal Reserve. And that would, again, hurt the U.S. dollar.
Great to get your insight as always, Adam. Thanks for joining us.
Thanks, Greg.
Adam Button is the Chief Currency Analyst at Forex Live.